Happy Friday, traders. It's 8:01 a.m. Chicago time on Friday, the 27th of January, 2023. Thanks for joining me on episode number 2401. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Real quick, I am not feeling well today. It's actually been building up over the last couple of days. Just a really, I don't know if it's a cold or a sinus infection or something. So today I'm basically going to sit out after the trader bite. I'm just not in what I would call trading shape. So I'll try to make this quick. The first thing I want to do is this tradition that we have. Every so many Fridays, every other Friday or so, we ask everyone who's watching to tell us where they're located just for fun, I guess. And also you can, if you're on YouTube live chat here, you can connect with others. You can hit the @ symbol and type the person's name and select it and communicate with the people while the broadcast is going. And you can also share your Twitter feed or your Twitter handle, and you can connect there. The goal here is to try to get traders to connect. You might be trading next to someone in Ecuador and not know it until you're here. So I'm using this platform since we get overall about 2,200, 2,500 views a day across YouTube and Twitter media. I figure this is a good place to have people kind of connect. So if you're open to connecting, you should add your Twitter or Instagram handle or some way for people to get a hold of you. Please don't add your any identifying information such as phone numbers, emails, because those get harvested and used by spam bots and things like that that go across YouTube, since this chat is available on YouTube. So anyway, so that's just a little service that I love to throw out there for everyone to kind of connect. Hopefully, I know a few people have connected, and I'm glad to hear it. So let's move on. Let's dive right into convergent trading's. Hang on, I got to blow. Sorry. Okay, Convergent Trading's pre-market summary sheet. The current risk posture is mixed again. We're basically trading sideways. We're slightly off. We're mixed to risk or to slightly risk off this morning. In case you didn't hear, Intel's earnings yesterday were just really awful. They missed by 50%. 50%. This is considered one of the worst performances in this earnings season so far. Although I think Boeing kind of kills it with their miss by 700 some odd percent. But Intel really missed yesterday and is down today. So that's one of the key pieces. Japan and Netherlands join the U.S. in restricting semiconductor machinery to Chinese companies. The world, we saw what happened with those chips during COVID when China had that zero COVID policy and those plants were shut down. Essentially, the world's production came to a stop. And clearly, and I don't know how we didn't see this before, but clearly there was a tremendous risk that anything going wrong in China could impact everybody everywhere. Cars, which surprisingly use like 1,200 chips or something, the average car today, couldn't be produced, and electronic equipment and so on and so forth. So there's this push, there's that bill that was pushed out by the current U.S. administration for semiconductor production in the U.S. There's a lot going on there. It's a very interesting area. But Japan and Netherlands are kind of moving in that direction. Hasbro has announced layoffs. That's really the key news. Pre-market, we had core PCE, which came in line. Personal income came in line. Personal spending was slightly worse than expected. We expected negative 0.1%, got negative 0.2. We do have Michigan sentiment final. Michigan sentiment final at 10, pending home sales as well. Um, and the Michigan inflation expectations, the forecast was for 4%. So if you look at what's coming, we have a Fed meeting next week, next Wednesday on February 1st, and this PCE is a key input for the Fed currently. So this was very important. We saw a little wiggle and jiggle, but overall the market's completely sideways. Looking at the S&P stats now, the market is in complete and utter balance. I mean, it's just really terrible balance right now. We're trading against yesterday's, we're trading against yesterday's point of control. We're trading below yesterday's settlement. The volume is 169,000 contracts, and the inventory is 100% short. The range is 13 points. I probably shouldn't. I'm sorry about that. Probably shouldn't scream out like that with the scratchy throat. The range is 13 points, which doesn't make me feel bad for laying on the couch today for a little bit. So I really am not expecting very much. We hit a big target yesterday. Let's take a look at the technicals. The technicals. If you recall, I don't want to regurgitate yesterday's stuff and pull up yesterday's discussion, but if you recall yesterday, the key target, the key plan yesterday is to look at, since we opened in a gap, the key plan was how does it act against yesterday's high, the prior session's high, and the expectation is, if you recall, the number we're looking for is 40, 78, 50, right? That was the price. 40, 78, 50 was the key target. So there were two key trades yesterday. And that is to monitor for any responsive action. So a big push on the open to the downside. Look for a weak counter push by buyers, and then look to sell into the prior high. That's one key trade. Prior high being 40.35. It's at 40.35 to 36 area, if you recall. That's one key trade. Looking to take that from around 40.50. Okay, so we're looking for about 15-20 points on that trade. And then, and the gap to settle, which is 40.32, right? So that's a standard gap to settle responsive trade. The second trade was if the market's initiative, meaning it's, in this case, because we're gapping up, initiative means we're buying in this situation. We're initiating away from balance. Hang on one second. We're initiating away from balance, and then we were looking for it to squeeze through the overnight high, and then to push into 40.78. That's what was expected, and we got both yesterday. So here's what actually happened yesterday. We opened right up. It looked like we were initiative early, but it didn't quite squeeze well. We did not see an impulse up, and then we saw an impulse down, and it created an opportunity to trade short in the 40.50 area, and it immediately pushed to the prior high a day of 40.35.75 right in here. So that was done, and then it put in a higher low a higher low and was unable. So this is where the stop would be on this short, really, if you were not, if you were very conservative, meaning if you wanted to give the trade as much room, the runner as much room as possible, your stop would have been right here. Takes that out, pushes right back to the open, and then it comes blasting with another impulse down, sets up a continuation trade right here against the zipper. So the stop, I think this is the one I outlined in Convergent Trading's chat. The stop would be somewhere in the 40.52 area or so, and then look for the continuation down for the settlement price beneath there. So once it got that done, again, we saw the same kind of action that we saw right here, right there. Those are very similar. High or low, takes out the high, pulls back, squeezes through the mid. So now posture is neutral for us, and then the next impulse up gets us looking for longs. Look for areas for an area to pull back against, and look for a run to 40.78. Yesterday's high was 40.77, so we're looking for 40.78.50. Yesterday's high was 40.77. So we missed it by about 6 ticks. And since then, we have just gapped open on Intel and just sat sideways. And what we have here is a completely balanced profile. And yes, I expected a quiet Friday last Friday, but I also cannot predict. But I also said that last Friday was options expiration, and statistically, if you listened, statistically speaking, quantitatively, the option expiration, the monthly option expiration Friday has an upward skew. So I said I'm not expecting much, but if anything, there's likely to be an upward skew. But last Friday just kind of took off. I don't remember the reason. It's been too long, and I'm too old to keep that kind of information in my head, I guess. But this morning, what we're doing is we're opening on top of the overnight point of control, the overnight VWAP, and the overnight mid, the full session mid. We're opening in chop. We're opening in a chop fest. I'm seeing a bit of a kind of a more blunt low than high, but this is where traders go astray, right? When I say something like this, you should really call me out on it. When I look at a profile like this and I'm like, oh, that looks like a weak low. What I'm doing here is squinting at a 13-point profile to see if there's an edge one way or the other. When you find yourself doing that, step back, take your hand off the mouse, and let the market do its job by telling you what it wants through an impulse move or something. There is no edge here to either side. This is what the market is doing. The volume's been okay, so we know it's loaded, so we know this thing's compressed somewhat. So we'll see what kind of an open we get. But overall, it's so easy to squint here and be like, "Ooh, look at those bottoms, man! This is a quadruple bottom. This is probably not going to last. Let me just find a short. Oh! My shorts got stopped out. First trade of the day on Friday. Now I'm down. Now I'm going to spend the rest of the day frenzied, looking to make money back so I can have a good weekend. Not a good start, right? So understand that the context is we're on top of yesterday's point of control right up here. We're trading on top of full session mid, full session VWAP, as I said. The delta is just sideways. Everything is sideways with 13 points of range. We use the overnight range as a proxy for what we might expect on the open. It doesn't work 100% of the time. I don't even know if it works 50% of the time, but there is a correlation there. Okay. The other thing is, have you noticed that the openings have consistently been mixed? When you look at the Convergent Trading pre-market summary sheet, it constantly says mixed for risk posture, yet we've moved up 100 some odd points in the last few days. So what that's telling me is, remember the days, for those of you who've been around a while, started about 6 years ago. I think it started with Brexit, maybe. It just seemed like the big moves were overnight. And since the beginning of this year, I don't know if you caught it, but it seems like the moves are not happening overnight. So we end up with this mixed kind of posture open. Um, Mixed posture open, and then we take off from there. So let's get to the TPO chart to look at what it is that we're doing overall. And what we have is a market that is, again, one time framing up. So the trend really is to the upside. So we cannot ignore that. It has tested. This was a very clean, clear test into 39.60 and failed to hold, finishing very strong on that neutral extreme, gave us a gap yesterday. So we know from Wednesday and yesterday the buyers are really in control, and they have room to about 41.50 right up here. Now that we've taken out the 4078, we have the 4100 to 4115, and then 4150. There's still room there depending on what earnings do, but this is one of those things where we do have the Fed the third day of next week, and that's where we'll really shake out the weak hands and find out what's next. So this is a clear, this chart here, this TPO chart here is clearly delineating kind of the box areas that we're trading in. So when we go to the TPO detail, we see that we had this this was 4013, if you recall. We've played this number quite a bit this week. It's now 4015.50, but because we incorporated the last couple profiles, I'm going to leave this profile on its own because it's kind of moving into this 2-day imbalance, and I want to see what happens next, so I'm not going to incorporate it. Key target below still remains in that 4015, 4013 area. Key target above is still 4078.50. We're kind of in between places now. If I scroll back, you'll see that we are way up here in the low volume node of the profile, and we actually moved into this high volume node of this composite yesterday. And if we clear this 4085 area, then we are likely to push right into the next higher node up here, which is, as I said, 4010, 4110, 4115 or so. That's the kind of the overall tact. Looking at relative delta this morning, small lots in control. Small lots in control, trending down. Very large lots buying. We see a couple of decent lifts here. Large lots below the zero line. We're likely to push lower on the open. You know, if I had a gun to my head and I had to make a selection, I would say it is most likely going to push back to 40.52, 40.48 down. Okay, so as we open this morning, let's go back to this. As we open this morning, my expectation is it opens, jiggles, pulls back to 40.52. So I'm looking for 40.52, 40.48. And I'm looking for it to base in here. And then push right back to the open and then start to squeeze. So we'll get our overnight low stat done. We'll have the prior settle stat going, and this might, I don't know. I don't have high hopes. It doesn't matter. I'm going to be on the couch today, but I would be looking for 40.75.50 on the upside if it wins back the open, and is now above VWAP and mid. Full session VWAP, full session mid, then I would be open to having a runner up for 40.75.50. That's the key trade of the day. If it doesn't do that, if it opens and it squeezes higher, I'm going to be be watching carefully the quality of this move. Does it continue? Is it a response to settlement? So we get a gap to settle, an internal gap to settle trade that kind of squeezes in that direction, or does it move up, squeeze a few people, then come back, test the other side, and then you end up with this kind of thing where it's just an expanding an expanding kind of balance. Okay, looking at the NQ. The key number for the NQ, if you recall from yesterday, was 12,300. If we remained out of balance and became initiative, 12,300 is the price that I'm looking for, and it got to like 12,115 or something like that. It settled at 12,107, and overall, the Nasdaq traded very similar to the S&P. Hit all of its kind of statistical plays. The Nasdaq did not go to settlement. The close and settlement are not the same thing, by the way. It did not go to settlement. The Nasdaq showing relative strength. The Nasdaq pulled back to the prior high a day at 11,904 and took off from there. Nasdaq again relatively stronger. The market has more of a risk-on appetite currently. The Nasdaq still in a very low range, choppy balance. The Nasdaq's overnight point of control mid and VWAP are all in the same place. Same idea with the Nasdaq, expecting it to squeeze down, most likely through the 12,000. And most likely down into the 11,975, bringing us here. I'm expecting this price here, this area right here, to see a test. So I'm looking for 11,975-ish for a bounce. If we get an impulse up and it clears the open, consolidates, and it just doesn't look like it's pulling back or selling, then you're looking for the next trade becomes a gap to settle trade back to 12,107. Looking at a big picture view on crude, crude has been in a consolidation since about the 12th. Crude has been just sideways this whole time. It trended up and then it kind of fell back on itself. Yesterday, crude tested the MC point of control in this region, and even though it opened in a gap up, it had one time framing down. It broke that on the gap up on GDP. Tested higher, and then range extension down, and ended up finishing below. This morning, again, gapping up. Crude is expected to squeeze down into the 81.50, 81.25 area. 81.25. Okay, 81.25 area. Use that as a base. Not likely to close the settlement price and then squeeze higher. Why not likely to close the settlement price? Because if you look at the relative delta in crude, well, it's come off since the open, but the relative delta was positive across all channels. It's kind of looking weak now, but which I kind of expect. I expect it to pull back a little bit on a gap. We're gapping open higher again, but it's one time framing up. The trend in crude is balanced. Overall, the trend on a daily is now to the upside because of yesterday. So I'm not here. I would be looking for areas to lean against for a long into crude unless it breaks through and takes out the settlement of the prior day and starts continuing lower. Okay, I'll leave you with that. Thanks to those of you who participated in providing where you're from, where you're hailing from, and so on, where you're located. It's really nice to have a community. I'm all about community. Good luck today, and I'll catch you on Monday morning. Take care.